Yes, sir. Let's do it. Well, Zane, man, welcome to the base space. We're really, really excited to have you on. I'm Mewtwo, obviously the founder of the base space, and you got my co-hosts, Super High and Chase.
What's going on, guys? Thanks for having me.
Yeah, no problem. Thanks for coming on.
Oh yeah. I guess before we dive into VesperFi, curious, Zane, how'd you get started in crypto? Like, what was your first experience?
Sure. Yeah. I found out about Bitcoin in 2013. I was 15 at the time. I was playing Minecraft, and someone showed me this Minecraft Bitcoin casino. And my first reaction was, holy shit, I can gamble online and no one asks how old I am. This is the coolest thing ever. And it was kind of all over for me after that. But I never really got off of it since I found out about Bitcoin in 2013. And I did freelance writing, journalism when I was in high school and when I started college. And then I got more into PR marketing type roles. And then I learned how to code, and I got into more technical roles. And about a year ago, I went on full time with Block Inc., which is the parent company of Vesper.finance, as well as Metronome and a few other branches. I have my own things I'm doing. I have my own project, and I pretty much at this point in time just do crypto 24/7.
Oh, that's dope. I like how you got started with Minecraft. That's fellow based. I'm sure a lot of us are really big fans of the game, especially myself. Um, have you always been in charge of strategy at Vesper, or did you sort of rank up to that position?
So it's kind of like everyone does a little bit of everything. Like we have titles because we have to, but so initially I came on to Block as a content writer, a technical writer, and then as we need a million different things done, given my existing skill set, my existing understanding of blockchain, DeFi, smart contracts, all that stuff, I've been able to take on more nuanced roles in the project.
Yeah, I feel like while it's a new project and up and coming, I feel like you gotta be pretty nimble and wear a lot of different hats. How big is y'all's team?
That's a good question. We are hiring so fast. We've got to have just in the Vesper team. We've got to be at probably rounding out around 20 right now. The larger Block company has got to be at least 40 or 50 employees at this point. We've been hiring pretty much as we can over the past several months.
Yeah, that's awesome. I know we have a lot of people, a lot of listeners that are looking to get into crypto. Don't want to veer too far off track, but do you have any advice for people looking to get into the space?
Yeah, I mean, so I, like I said, I started when I was 15. I didn't have any dollars to my name. I just kind of found ways to spend my time learning and doing like referrals and micro work and all that stuff. And I would definitely say that anyone who's new to crypto, looking to get deeper into crypto, just, everyone's got a skill set. And for the most part, all projects need a lot of help. Find a project you're really interested in, find a community you can really jive with, and just volunteer your time and energy, and I think oftentimes that pays off very well.
Yeah, 100%. I mean, honestly, that's a really big theme that we have seen on the base space from other projects is volunteering and getting involved in that way, and people then eventually becoming full-time employees or contractors for those projects. So that's really, really cool and very based. And I know Super's learning to code as well, so he's on his journey.
Awesome. That's the way to do it.
Hell yeah. Yeah, I guess at a very high level for folks listening on the call, what is VesperFi, the protocol, and also could you kind of dive into the VSP token at a very high level, even for people that don't even understand crypto or are new to the space?
Sure. Vesper is a DeFi yield aggregator What that means is you deposit tokens into the Vesper smart contracts. Those tokens get sent out into the Etherverse, where they can be the most useful, where they can earn the most yield. And then our contracts handle everything in terms of realizing that yield, compounding it, and recording that for the depositors. It's all non-custodial, meaning that we can't take your funds. You can deposit and withdraw any amount whenever you like. And yeah, we have, essentially, to go a little bit lower, we have a whole bunch of different strategies and new strategies being coded, and we kind of rebalance the pools based on where the best strategy is at the time. And so the VSP token is the governance ownership token over the ecosystem. Our pools generate revenue from, we take a cut of the yield that is generated, and we also charge a small withdrawal fee. And that revenue buys back VSP and delivers it to existing holders. So it's kind of like an on-chain buyback mechanism. So if you hold VSP, you can share the revenue, and it's also the governance token over the ecosystem. So you can vote on changes to the platform, upgrades, new pools, that kind of stuff.
Yeah, that's really, really cool. Could you kind of dive into more like the governance component of the token? So, and also, like, do holders with the majority of the VSP token get like a more weighted vote within the governance?
Yeah, it's weight-based voting. So we have, essentially, we have another pool. All of our pools have a V ticker in front of it. So we have a VVSP pool, and that's our governance pool. So if you deposit your VSP, you get to share that revenue through those buybacks, and then you use that VVSP as your voting weight. And we're, like many projects, we are kind of transitioning it into a full DAO model, meaning where independent VSP holders own everything about the platform. And so over time, those votes and I would say the frequency and the weight of those votes will increase to the point where token holders are the ones that are managing all the pools. They're the ones that are introducing new strategies and all that good stuff. Where we're at right now is we kind of have a federation of sorts with team and elevated community members that have multi-sig ownership, meaning that they have admin keys on like treasury wallets and that kind of stuff. And then some stuff is reserved for the VSP holders, like voting to change the revenue model, for example.
Got it. And like, say, like I'm like an average community member within Vesper. Is there a way for me to like elevate a proposal or submit a proposal, or like how's the average community member get more involved in the project?
Yeah, so we do a lot of our like development or work happens in the public Discord. And so if you're a token holder, if you're a community member that you have some idea or you want to elevate some proposal, you do it in Discord. And so the process kind of is, we have governance channels in Discord. You can talk through a proposal there, and then the proposal can get drafted, published to GitHub, and then put into a vote, and then we vote on it.
Got it. No, that's really basic. Yeah, that's what we've heard like a lot of around a lot of newer projects. You really need to be involved in the Discord and participate there. I guess like once in terms of into a more formal process, do you envision it being like a submission form, or how do you envision that process evolving?
Yeah, so we use Snapshot Page, which is a service for offline token weighted voting. And in Snapshot, we can set it up where anyone who holds X amount of tokens can pass a proposal outright, or they can introduce a proposal, rather. So it becomes more of an art than a science, in the sense where it's like, there's certain like conversations you should have before you propose something, and if you don't follow those steps that the community kind of agrees upon, it's unlikely that your proposal will get traction. But ultimately, it will be kind of an autonomous experience.
Got it. Yeah, that sounds really, really cool. I mean, these DAOs are really, really exciting, and we've seen a lot of success with them from other projects, and I think it's a great way to keep the investors and the community involved. So really, really excited that you guys are building that out. We have a lot of different Link Marines that are in the chat. Curious,
I see that.
yeah, it's a pretty big Link community that follows the base space. I'm curious if you could elaborate a little bit more on like your partnership with Chainlink and like how that fits into Vesper.fi.
Sure. So some of the Vesper products, smart contracts, what have you, rely on price information. For example, if we are routing through Maker and we take out a loan through Maker, we need to make sure that the loan stays above water and that we are able to rebalance the loan and make sure that everyone's funds stay whole. And so for some of the different back end under the hood interactions, we have to get price data, and so that's where Chainlink comes into play. Beyond that, we have a Chainlink pool, so you can deposit your Link and earn Link plus VSP yield. And yeah, I think that pretty much sums it up.
Yeah, I'm curious from like a, as this moves to a more DAO structure, do you think there will be kind of this future where the DAO will need to allocate acquiring Chainlink to pay for that price feed data? Or do I have like kind of that relationship a little confused on how that would work?
I don't think I know enough about Chainlink to answer that question. I anticipate there will be some costs involved. If we do need to hold Chainlink, or if we do need to buy Chainlink, we are getting Chainlink revenue. We are getting Link revenue as we earn yield, and I'm sure it could come from that.
Yeah, do you think Chainlink as well would help with like resistance against fraud within the Vesper ecosystem?
Fraud in what sense? Like give me a scenario where there could be fraud. If that's not putting you on the spot.
maybe in terms of like price manipulation, manipulation of data feeds, things of that nature.
Yeah. So there have been some DeFi attacks, exploits where the attackers use flash loans to disrupt the price of a market, and then they're able to perform liquidations and that kind of stuff. Where we're using Chainlink now, if Vesper was getting targeted by that type of attack, which I think would be very hard to do because we're taking out loans against wrapped Bitcoin and ETH and Link, which is a pretty strong asset to disrupt. But if we were relying on a smaller DEX that could be susceptible to the attack, as I understand, the price feeds can help to mitigate that vulnerability.
Hey, so real fast, using the value generated from the buybacks or from the products to buy back VSP off the market, what percentage does this occur at, and how often do you guys buy back?
It's right now. It's 95% of all revenue, and it happens just about daily. We are undergoing discussion with our community about how to upgrade the model. Right now, it's a simple 95% to VVSP buybacks, or to VSP buybacks, 5% to the strategy developer that made the strategy that earned the revenue. We're talking about having a more robust revenue model where we have kind of like different buckets for different things. So we could have like some revenue can spill into a deployer account for deploying new contracts, and when that bucket or that wallet's filled, then it'll go back into the other flows. And we have those kind of ideas that we're working through with the community right now.
Hey Jeff, could you expand a little bit on what buybacks are, and just kind of like from a conceptual perspective, like what that does for the Vesper ecosystem and for holders?
Sure. So Vesper is primarily traded on AMM decentralized exchanges, and AMM being an automated market maker. An example of that being Uniswap or SushiSwap. And so everything in the Vesper ecosystem is on chain. So when you deposit your assets into, let's say, the wrapped Bitcoin pool, your wrapped Bitcoin goes out and it earns more wrapped Bitcoin. And if you withdraw it, you get your wrapped Bitcoin back. We take a little haircut off of the yield that your coin earns, and also we take a small withdrawal fee. And so essentially the way the buybacks work are we pool these fees into a buyback account, and we have some on-chain monetary policy, regarding like how much the buyback is each day, depending on how much revenue has come in over the past X days. And so we take, or the contract takes some amount of the pooled recent fees, and it sends it over to Uniswap or SushiSwap, wherever the price is better. And it buys back VSP, and then it delivers that VSP to the token holders that deposited their VSP into our VVSP governance pool.
Gotcha. And so actually going off that, I had a question around the fee. So I noticed that so there's a 0.6% fee on withdrawals, and
Yep.
then there's a 15% platform fee on the yield. Could you kind of like touch on these fees, like how they're decided? I know you just kind of like went into like how that revenue will be used for.
Sure. So we initially modeled our fees based on what traditional TradFi fees look like. And most funds take a 20% performance fee and a 2% management fee. When we launched Vesper when we had our pre-launch mainnet Vesper beta, initially we were targeting 1.5% withdrawal fees and 15% performance fees. The benchmark being it's a premium product. It's still cheaper than TradFi. We noticed that people didn't like how high that 1.5% withdrawal fee was, and we also noticed how much of our fees were from withdrawals versus revenue generated, and so we decreased the fee from 1.5% to 0.6% to kind of better balance out the revenue between yield and withdrawals. And we also looked at other competitors, other yield aggregators. So we're targeting a lower fee than Yearn. Where some of the protocols don't have withdrawal fees, but they have much higher performance fees. And so I think holistically we are pretty consistently on the low end in terms of the fees we charge our users.
Gotcha. And I think this also this kind of incentivizes people that are engaging into the grow pool to stay there for a little bit longer time. That way you have that consistent liquidity, if you will.
Yep, that was exactly our idea. We had a lot of internal discussions about what that fee on your principal should look like. Should it be a deposit fee? Should it be a withdrawal fee? Should it be a management fee? We settled on a withdrawal fee because we don't want to hit people when they come in. We want to hit people when they come out, and we want to encourage them to stay in as long as they feel comfortable. If you never withdraw, you never pay a withdrawal fee, which of course you do need to withdraw to realize your gains. But yeah, the idea was exactly that, to incentivize long-term depositors.
Yeah, was that kind of the line of thinking as well? Because I think one thing that I found pretty interesting was that when you guys provide the rewards, like the LM rewards, it's on a 12-month basis. Is that right?
Yes. So we had we distributed. Vesper was in having, like we talked about earlier, and having decentralized governance, and trying to and spending a lot of time in trying to be a true community ran platform. One of our challenges was, how do we make sure the token is properly distributed in a fair, decentralized manner? And so a majority of our supply is distributed to people who use the product, for people who provide liquidity, and it's over a 12-month kind of distribution cycle, which most of the rewards were distributed right in the first few months, and now that we're kind of more mature, they're tapering off.
Gotcha. And is that the norm, or because as more pairs can grow on the pools, I could see maybe some pools be very popular for like a short spurt, but kind of die off pretty quick. So is that would that kind of affect the mechanics if a certain pair had a 12-month reward infrastructure, like a reward incentivization program, but really kind of like dies off after, say, like 2 or 3 months of high activity?
Yeah, it's definitely not. It's not perfect. It was our best guess pre-launch. We are, in part of our ongoing revenue V2 discussion, we're also looking into how we can more effectively allocate rewards, in the sense that, yeah, if a pool dies off, we shouldn't keep giving the same amount of rewards to it versus a pool that is earning a lot more yield and has a lot more deposits. And so one thing that we're looking at is doing something more like Sushi Swap with their onsen, where it's the rewards are weighted based on the TVL. But that's all right now. It's on that 12-month period, and we're starting those conversations about how we could upgrade the model, perhaps.
Gotcha. Yeah, and then of course, like on the flip side, that would create like an arbitrage opportunity as well, right? If there's not a lot of activity and you could kind of get like the lion's share of it, you may have like an outsized return on the rewards themselves.
Yeah, there's definitely some gamification involved, which also works to our benefit with using that withdrawal fee. If people want to be more aggressive in hot pools and try to, hit the high reward when it's there, they can. We get, the other VSP holders get a little bit back because they're hopping between pools more and they're paying more withdrawal fees.
Gotcha. So I know we've kind of been talking about grow pools at a high level. Could you touch on Vesper Earn and kind of explain
Definitely
what that is?
Yeah. So, so the idea of grow pools is your standard yield aggregator. You deposit whatever, you get more of it from yield. Vesper Earn is a different design behind these smart contracts, where you essentially, quote unquote, program your yield. The very the highest abstraction of it is you deposit X and you earn Y. So you can, I believe the first one we're going to do is you deposit ETH and you get DAI every day. So it's like a daily DeFi yield income. And ultimately, you'll be able to kind of pick and choose what you want to deposit and what you want to get paid out in. So if you're a Link Marine but you're stabled up, you could deposit USDC and you could be passively buying Link every day. There's also some conversation about how that could be an exciting project or an exciting product for like smaller tokens, where like you have like some community coin, and let's say I'm really bullish on the small cap coin, but I already have a ton of it. I don't want to put all my money into it. However, I'll set my existing crypto aside and I'll dollar cost average into it. By that, yield buys the small community coin that I'm interested in. So there's all kinds of different stuff we can do with Vesper Earn that I don't think you really see in many other places, and that's definitely something we're really excited about.
Yeah, so that, I think you had mentioned, so that is single-sided liquidity?
Yeah, none of our products are subject to impermanent loss. They're all single asset deposits.
Could you touch on, because I feel like that's to my knowledge, there's really only one other DApp that has that. Could you guys touch on kind of like how you guys went through the process of creating that? I know that's probably an extremely very specific question, but it's just like an interesting feature that not a lot of dApps currently have.
Yeah. So when most people are farming yield, the way they're doing it is by providing liquidity to an AMM, an automated market maker, a sushi swap, or a Uniswap pair. The reason why that happens most of the time is because it's pretty it's a pretty good system where a project can have a token, they can incentivize people to provide liquidity, and they can pay them to do that. The downside to that is when you provide that liquidity to farm that yield, you're not guaranteed to get out what you put in. If the price of one asset goes up or down, the ratio of pooled assets between the two change. So if you're providing liquidity for Link and USDC on Uniswap, and Link goes up 10x, what you're really doing is you're putting all these sell orders into place that people are buying into. So when you pull it out, you'll have a bunch of USDC. You won't have hardly any Link. Vesper's strategies for earning yields do not deal with providing liquidity. We route assets through places like Compound and Aave, where they do peer-to-peer lending. We use collateralized loans through Maker to get like a higher yielding asset. We just launched an aggressive DAI pool that uses Curve and Yearn, and all these different yield sources we're hitting are not subject to that impermanent loss that you get if you're providing both sides of a liquidity pair to like a Uniswap or a Sushi swap.
Gotcha. I think that the last area that I wanted to touch on under kind of your products to go through is the Vesper stake, which I know I think you had already kind of like really touched on that. So say you wanted to provide liquidity, not necessarily like Link or ETH, but you want to buy VSP on the market, you can in turn provide that liquidity for VSP and get the VSP.
If you deposit your VSP, you get your VVSP, which is like your tokenized share in the pool, and then the pool earns yield by getting those buybacks. You can also provide liquidity to Uniswap and Sushi Swap, where we're doing those buybacks from. You earn VSP from doing that, but it is subject to that impermanent loss that we talked about. Vesper stake is the idea that in the same way that we manage how you can farm yield, we help manage how you can stake into a project like an ETH2 node or something like that. And that's further down on the roadmap for what it's worth.
Gotcha. And so what's the current yield for that on staking VSP currently?
It's a little bit suppressed because bear markets or the recent bear crab, whatever you want to call it, market has depressed open market yield. But let me pull it up. I think it's about 20% right now for VSP. And that's all from buybacks, at 22% today.
Hey Zane, I'm curious. Is your platform mainly being used by retail investors right now? And do you have any interest from like institutions or businesses actually jumping in and depositing money on Vesper?
Mm-hmm. Yeah. So to our knowledge, right now it's mostly retail. We do have a pretty, I believe it might be a first of its kind partnership with. There is this fund called Blockforce Capital, who they right now are raising capital for a what they're calling a DeFi growth fund, which is a market basket of top DeFi assets. All of those assets route through Vesper. And so I believe this is the first of its kind fund working with a yield aggregator, at least to my knowledge. And so we will have institutional dollars going through Vesper as soon as August 1st, I believe, is when the fund, when they like mark all their deposits and start deploying it. So they'll be buying a little bit of VSP. I think they said 10% of the fund is allocated towards VSP, and then the other 90%, well, all 100%, but the rest of it will be like USDC, wrapped Bitcoin, ETH. I believe Link is on there too, and all those assets will be deposited into Vesper, earning more yield for the client.
That's really awesome. I don't know if you can talk about it, but I'm curious, like, what was that process like to get them on board, and what were kind of the main questions that they had? I don't know if you can give us like any insider scoop into that whole process.
Yeah, unfortunately, I'm not part of the business development team. If you look on our team page, two of our co-founders are Jeff Garzik, who is one of the original Bitcoin developers who worked directly with Satoshi. The other one is Matthew Rozak, who's one of the first Bitcoin angel investors. So between those two guys, we are pretty hooked up to, I guess, the suits, you could say. I know that has a bit of a negative connotation, but between those two and between some of the other talents on our team, we have a lot of access, a lot of exposure to those types of partners. In terms of what exactly it was that they were looking for, what questions they had, what their concerns were, those are conversations, unfortunately, I was not privy to.
Yeah, no worries. Yeah, I would just be curious from like an educational standpoint, especially as we have a lot of people interested, and like we definitely hear a lot of discussion around, businesses and corporations wanting to get into this space. Yeah, it's always interesting to learn like what are those barriers, to get them forward.
Yeah, I definitely think that, just generally speaking, the biggest barrier is just the regulation and the legality surrounding it. Of course, like the big institutions and the funds and all that stuff, they have a different set of rules they have to abide by, and crypto continues to be this kind of gray area for them. And I think generally that's the biggest barrier to adoption.
Yeah, 100%. That's what we've heard from other projects in the past. I'm curious, like, kind of diving into like the future of Vesper. Do you guys have any really exciting developments that you're going to be launching in the rest of 2021?
So many. We have so what's great about the Vesper architecture, the engineering, is that we designed Vesper in a way where it's basically like a Lego kit, which I know is an overused term, but every time we make a new strategy, every time we make a new pool, every time we route through a new platform, those are all modular contracts, which means we can, if we make a strategy for Link, we can use it on Bitcoin. If we make a strategy that turns Link into Bitcoin, we can route it through Bitcoin. We can use those strategies. What that means is that essentially these first few months, as we've been building out all the individual tools, we've been building out all the individual Lego bricks, and now we're getting to a position where we can start to snap all those bricks together, and it makes it a lot easier to make new pools. For example, we have a back end DAI pool, and we just launched the aggressive version of that. And what we can do with a DAI pool is any asset that you can take out a loan with on Maker, we can make a pool for that asset. All that pool does is take out a loan and then deposit that DAI loan into the DAI pool. So a bunch more pools to come. Of course, there's Vesper Earn, which is that new primitive where you deposit one thing, you earn another. We are, it's already announced, so I think I can say it. We're launching on Polygon very soon. We're going to be a chain agnostic yield aggregator where you can deposit and, you know, farm yield wherever. The big barrier to that is we can only really make those deployments in places where you can earn yield. Right now, Polygon's the biggest place you can do that. But yeah, a lot more pools, Vesper earn, and more primitives. There's a lot of great ideas and conversations brewing in the community, and because it's designed the way it is, it's more so than other projects. It's very easy for us to kind of take all the stuff we've built together and repackage it into something new and something exciting.
Yeah, 100%. I mean, it's definitely a smart move. You guys have already worked so hard to build out the pools and the technology. Like, why not implement those across other
and we already got the audits, which was, I think, the biggest headache. It's very hard to get audits these days.
Why is that?
Just because there's very few good auditors. There's very few good auditing firms, and there are a lot of projects that have fundraised a lot of money and are willing to pay a lot for those audits. And so, given our connections, given our existing relationships, we do have like ongoing relations with some of the best auditors in the space. But even then, for a period, it was like, well, we're backlogged 2 months before we can even look at this thing. And that's something that everyone in the space was going through. And pretty much your options are, you don't get an audit, you get an audit from a questionably reputable firm, or you wait. And given Vesper's kind of ethos in being professional, being sustainable, being secure, no audit is unacceptable, and a lesser audit is also unacceptable for us.
Zane, you touched on being chain agnostic. I feel like this is like a really interesting point in the sense of like gaining market share or like gaining new customers. Like, how important do you guys internally view it to be agile and nimble to be able to like be ready to deploy on all these other chains where there's maybe not as much competition as there is like in an ecosystem?
Yeah, so there's two elements. One is we're working through the deployments to Polygon, and again, the modularity of this all, and also the multi-chain nature of some of the protocols we route through, like Aave and Curve, at least on Polygon, means that once we get everything hooked up to Polygon, we can pretty easily plug and play on another chain or another EVM compatible chain. The our hesitance against that is Vesper pools route a lot of funds, and a lot of these side chains do not yet have meaningful yield sources that can take on a lot of TVL. And so the speed at which we port to different chains is largely going to be dependent on how mature those chains get in terms of their local DeFi ecosystems.
Gotcha. So is it kind of like a chicken and the egg type problem?
Yeah, I think so. I think if Vesper was on a I don't know, if Vesper was on an XDAI DeFi TVL might increase, and then there might be more interest in getting that. But if that interest isn't already there, Vesper will have a hard time going there because we can't really launch somewhere with zero APY.
Yeah, and Zane, kind of zooming out maybe even further, I'm curious, like where do you see Vesper.fi going in like the next 5 years? Like where do you see the company moving to?
Mm-hmm. So my I'll zoom out even further. My thesis on DeFi is that if you abstract out what the financial industry is, it's a series of different highly formulaic interactions where party A posts capital, party B pays to use that capital, and then the middleman matchmaker in the middle keeps all the profit for themselves. All DeFi does is replace that middleman and makes it so that the lender and the borrower are able to work directly with each other, which means they get a better rate when you're borrowing and more profit when you're lending. And so with that, I think DeFi is going to have a radical shift on the financial world as we know it today. I think Vesper is going to be in 5 years as that a transformation happens. The idea is that Vesper can be that kind of underlying router where people who maybe aren't as tech savvy as we are, people who maybe don't have as much experience with crypto or not as much comfort, they can just use Vesper. And perhaps 5 years from now, Vesper is integrated into like a, I don't know, I don't want to name any names, but like a custodial TradFi service that has a similar DeFi growth account, and you put your dollars into it. Those dollars route through Vesper, and you never know.
Yeah, that's a really interesting outlook, and that's kind of like how I've wondered how this whole thing is going to play out in the sense of, current banks or credit unions. They already have their quote like networks, right? Their customer base, and is it kind of like they're just going to absorb into these protocols and then just be the user interface on the front end, but on the back end, basically the bank's products are replaced with these protocols? Or will it be the sense of they may develop their own?
My personal opinion is that TradFi institutions are going to have to adapt, and the ones that refuse to adapt are going to get left in the dust. What that looks like, I'm not so optimistic to think that DeFi will replace banks. I think banks are smart enough, they have enough resources to understand when they need to play catch up, and I think they will, work with the resources available. I think kind of the developments, Vesper developments with our Blockforce Capital partnership, as well as broader developments with Aave and Compound, both offering institutional products. I think it'll look more like that, where they'll have certain DeFi product offerings where it might look the exact same for the end user, but under the hood, they're using these different DeFi protocols, and they don't get to take the whole pie for themselves anymore. They get to take their 10, 20%.
Zane, if you're cool with it, I did want to open it up to the audience and see if anyone else has questions. We can bring them on one at a time. If you're
yeah, sure.
If you guys have, if anyone in the audience has questions, just requests. I'll totally let you guys up one at a time. We'll see if we get anyone. If you're also don't want to speak, you could always send myself, Super, or Chase a DM. We can ask it for you. 100%.
So Zane, safe moon to the moon?
Sorry?
Safe moon to the moon?
I'm curious how long it'll be until it all kind of, actually, I don't have a good understanding of how much of it is now locked liquidity, because they have that that hate liquefy mechanic underneath it. So I can't say whether or not it'll go to zero, because I'd have to look at those metrics. But I am surprised that it has gotten as big as it did, and it's continuing to be a thing.
Yeah, me too, honestly. So, just while we're waiting for people to get on, you said you were on TikTok Lives. What kind of coins are they showing? You said they were worse than SafeMoon.
Oh my, the worst. So there is, what do they like on TikTok? They love Hex.
Oh, the pawn.
They love Hex, which I get into arguments with Hex people on Twitter pretty frequently. Which means I've actually done more research into Hex and crunched the numbers, and I was doing some very favorable models based on the global volume of Hex since inception versus the market cap, and it's over 99% of Hex holders have realized no gains, or over 99% of Hex gains are paper, and there's no liquidity. So one day there's going to be a bank run and it's all going to go to zero. But yeah, Hex has similarly surprised me that it's gotten as big as it did. What else do they like? They really like Ripple. They really like Helium, which is it's supposed to be an IoT network where you buy a Helium miner, and then the miner acts as a node on the network, and it earns Helium tokens. It kind of reminds me of Skycoin back in the day. I'm not too confident on that one either. They're really into Hashgraph, which is like an enterprise, like a blockchain for enterprises. What else? Like all stuff that I really just do not care for. And then they've also got like different tiers of TikTok shit coins.
Why do you think like what narrative is it that makes some of these projects just so compelling to people maybe not as like tapped in to some of the information? Because I feel like it's just like you could categorize it, or I feel like there's a theme if you were to look at it. I'm just curious if you
I would say that the type of platform TikTok is it's bite-sized content without really a way to dig deeper. And I think the common denominator between all of those is they all have really strong, really easy for normies to understand sales pitches. Hex is market, and it's not this. Hex is an actual Ponzi, but it's marketed as what's it called? Time locked interest deposits, which is like one of the most popular financial products in the world. It's banking on the blockchain or whatever. Ripple is the banker's coin. That's very easy to understand. Hashgraph is blockchain for enterprises. Helium is labeled the people's network. And I think it's just stuff that's really easy to hear like 20 seconds of it and be like, oh, okay, yeah, that makes sense. I'll buy in.
Gotcha. Yeah, I like Hex. I've seen Hex so many times. I've always just wondered, like what is so compelling about the narrative with Hex on why people are so bought into it. So it's really interesting that you actually broke down the math and how everyone's basically just sitting on paper gains and waiting for the card house to.
And what's crazy is so you lock your Hex, get more Hex essentially. And there's two crazy statistics. One, only about 10% of all Hex is locked. And there's like over 1,000 individual addresses that have more Hex than there is open market liquidity. Like it's all traded on Uniswap, but Uniswap has very little liquidity. So there's like over 1,000 addresses that could dump their whole stack, and it would take it like minus 80%, right, when they do it. Like if just one out of the 1,000. Like if you go on Etherscan only shows you the top 1,000 holders. You can't even find the Uniswap markets because it's not in the top 1,000. The other thing is, I will say Richard Hart is like the perfect cult personality. He's like this big macho man. He has this whole setup where he brings people onto his live stream and is just super macho and like Trump debates them and like tears them apart. And he's just so cocky about how this is the best coin in the world, where if you don't really know any better, I can see how a lot of people can be like, wow, this is the guy I want to bet on. He's also like the original spam caller. So they do recently they sent out a bunch of Hex flyers to like people that got their ledger, their information hacked or stolen in the ledger hack. And so like I think he also knows how to reach a lot of people, and a lot of people who don't know any better.
Wow, that's so is Uniswap the only place that currently has liquidity for Hex?
So Uniswap V2 and V3 has like 98% of the liquidity. There's like a couple of like really low tier centralized exchanges that you can trade Hex on. They don't have any liquidity. And then there's a quick swap pair on Polygon that has like maybe $200,000 worth of liquidity.
Wow, what a scary time to not be tapped in and be led astray by essentially a snake oil salesman.
I know, it's crazy. I will say though that the Hex people are so cocky that like when it does go to zero, I'm not gonna feel bad. I'm gonna have a good time making a TikTok and tagging like being super petty and tagging everyone who like told me to have fun staying poor when I said I didn't like Hex.
I love how everyone in every community just tells people in other communities to have fun staying poor. Like, doesn't matter what you hold or what community you're from. Like, somebody's gonna tell you to have fun staying poor.
I know it's such like we say it as jokes, but it's so interesting to me to see like there's thousands of cryptos and a different crypto 10x's every day. And it's crazy to me that there's like a considerable number of people who have like their one token, they're part of the tribe, and they think if you don't hold that token, there's no way you're going to make it in crypto. Like the level of tunnel vision is pretty impressive to me.
The only coin I hold is Doge. Will I make it?
You could have made it.
You just buy it today.
At Doge.
No, I'm just kidding.
I'm actually curious, kind of like switching gears, just like outside of DeFi. You seem like you're like pretty tapped into this market. Is there anything like any other use cases that kind of like pique your interest? You know, like you're seeing gaming on the rise right now, like blockchain. You're seeing like the NFT craze. Just be curious to hear your thoughts.
Yeah, I am super into NFTs. I was in Rare Pepe and Pepe Cash at the very beginning, so I've been hooked into NFTs pretty much since the get-go. I think I think when you look at NFTs, what they are today at face value, I understand why some people aren't excited by them, but the underlying technology of you have this digital asset with liquid, verifiable public ownership, you can use that for a lot of different things. There's, for example, nearby me, there is this NFT gallery that just popped up in the past couple months. And they have, if you go to the gallery, you can mint their NFT. I think there's like 1,000 of them total. And if you mint that NFT, you become what they're calling a local VIP. And they have like different events and like different like local businesses that they've like partnered with. And if you hold the NFT, you get all these different local perks. And I think in the future, as we become increasingly like digitized and interconnected, you'll see more of those types of experiences made possible by NFTs. I also really like the idea of a DAO. I wrote a research paper on DAOs several years ago, and I've been pretty mystified with them ever since. The idea being that if you compare a decentralized autonomous organization with a standard corporation, essentially what you're doing is you're automating away, when done right, the most expensive, the most inefficient, the most error-prone component of the corporation, which is the CEO executive manager. And my kind of thesis on DAOs is if when projects do a DAO right, they unlock a superior way to do business that you cannot do without a DAO. And so outside of Vesper, I started a project called Governor DAO, which is essentially helping other projects become DAOs or helping other projects adopt decentralized governance. Yeah, DeFi, DAO, NFT are the big three for me. I've also really been into blockchain gaming since the start. I wrote a multi-part research primer for the block several years ago. Gaming kind of being an extension of my thesis on NFTs. I also think with blockchains, you can make new types of games. You can have new genres of games. You can have larger scale games. That's a very technical conversation that we probably don't have time to get into, but I am also bullish on using blockchain to make new types of gaming experiences.
Yeah, I'm extremely bullish on the future. I think the commonality across everything is just going to be power to the community, essentially. So it's gonna be a very unique point in time in human history that I don't think has really ever been seen before.
Definitely. The other thing with community ownership or community empowerment is two elements. One, you have a superior way to align incentives. So people who are interested in a project, they can get financial exposure. When they participate in the community, they boost their own investment. They do good work in the community. The project's worth more. And number two, when you do it right, it is infinitely more scalable than a standard business. It's as easy as going on to Uniswap and buying a token. Now you have on-chain ownership, and you can actually do something with that ownership. That is something that has never existed before.
Yeah, it's like switching from this model of value extraction to like value capture.
Definitely.
So, yeah.
Value multiplication, I would say.
Zane, I'm curious, do you think that you'll eventually be able to use your NFTs and stake them or use them within the DeFi ecosystem?
So there's a couple of projects that allow you to collateralize your NFTs for loans. I think we'll see more of those types of primitives, at least on the NFT collections, where they do have more stable markets, and at the very least, you can kind of map out a floor. Like you can do that with punks, you can do that with some art blocks. I do think that in the future, we will see a lot more of new projects use existing NFTs as a way to capture that audience. So, like, let's say the example I like to give is I kind of think of punks as like a universal VIP status, and I can imagine a future where there is exclusive like social club, or like maybe like a physical club in Miami with Bitcoin 2022 being like, okay, if you hold a punk, you get free access or something like that. Or you make a new game, and if you have a hash mask, you can use that as your avatar. I think we'll see a lot more of that, just because that is a great way to very effectively introduce yourself to exactly the community you're trying to get in front of. I don't think there's a better way, at least in crypto, or at least in NFTs, to, if you want to put yourself in front of like an exclusive high net worth VIP group, I don't think there's a better way to do it than catering to punk holders.
Yeah, I think you're spot on, and I'm kind of seeing the same thing with apes as well. The yacht club, I think that they're forming some interesting elements to their community that are in person.
Yeah, I went to the ape meetup yesterday. I'm not an aper, but they held the meetup at that NFT gallery I was talking about.
Oh, that's sick.
And yeah, we're definitely getting to a position where like we have more augmented experiences, where there's the physical and the digital component. I think NFTs are a great place where we'll see more of that.
Yeah. It's all, there's also like an interesting I was talking to Mewtwo about this the other night. In a way though, you can kind of create artificial floors with certain collections of NFTs, right? Like if you had two separate wallets and you basically place a artificial higher bid on a certain punk you have, it's kind of like, it kind of allows you to set the price. Obviously, it'd be a gamble, right, to see if somebody eventually down the line would pay it. But, it kind of gives you that point where you can be like, hey, like, look, I paid 5 ETH for this, but really it could have been 5 ETH from another wallet that you had.
Mm-hmm. I think that does happen a lot. The nice thing about NFTs versus other types of fine art or high value assets is if they're not super sneaky about it, you can kind of tell when there's foul play going on if you track the blockchain. But I think that definitely does happen, especially with something like punks, where like, you could buy a punk, for example, maybe not a floor punk, but maybe like a mid-tier rarity punk, let's say for 50 ETH. And then you could go and post it right away for 90 ETH, and from another wallet put up a bid at 60 ETH. And someone might bid 61 ETH, and then you made your profit. I'm sure that does happen.
Yeah, I feel like that is happening just if you look at the explosion of the NFT market right now. Like typically whenever you see like these massive like explosions happen, it's somebody is on the back end pulling some strings. I feel like to kind of capitalize on that.
I mean, there's all kinds of dirty stuff that goes on all around crypto. I mean, that's for sure. Unfortunately, I guess that's kind of a byproduct of it. But I think things have gotten and will continue to be more legitimate as the space continues to mature.
100%. Zane, really appreciate you taking the time to come on the base space. It's been hella based learning about Vesper. And yeah, man, this has been awesome. We do record these spaces. Are you cool with us posting this on our YouTube?
Yeah, go for it.
Thanks, brother. I appreciate you taking the time.
Yeah, definitely. Thanks for having me.
Of course.
Zane, what's the whole Jeff the Dunker? Is that a meme?
Yeah. Before I get off, so Jeff the Dunker is the alternative version of Jeff the Baker. When I got my Xbox 360 when I was 12 playing Halo 3, I thought it would be cool if it was like you got killed by like Bob the Builder, like something like that. And I came up with Jeff the Baker and have used it ever since. Once upon a time, I was doxxed, so I just went by Jeff online. Now, given kind of the work I do, my name's out there, but I still like Jeff the Baker. If Jeff the Baker's taken, I use Jeff the Dunker.
I thought it was funny because the CEO's name is Jeff, correct?
Mm-hmm.
Yeah. So I didn't know if it was a meme.
Yeah. So that was there was a period of time when I was first onboarded, and he didn't know me as Jeff the Baker, where it was like, is this going to be like a point of controversy? Am I going to have to retire Jeff the Baker as to not have confusion? But he didn't care. Jeff's a very cool, very he's not like the asshole CEO archetype. He's very much continues to be in crypto because he loves it more than anything, and he's very much like just in favor of everything.
Hell yeah. Yeah, I was talking about it with Mio too. I thought it was a joke in between the Discord or just y'all's community.
He's like, is this really Zane? Yeah, man. Well, I appreciate you taking the time out of your day to come on and speak with us. We'll definitely have to stay in touch and have you on once you guys like release like a major update. You guys can keep up in the community and so forth.
Yeah, definitely. Maybe I'll be able to get one of the more exciting people on next time. I know Jeff loves doing these things. Other Jeff.
Hell yeah. All right, guys. Stay based. I'll see you guys next time.
Guys. See ya.
Thanks, guys.